Hello, everyone, and welcome. Today, we are deep diving into a company that is often overshadowed by IT giants like TCS or Infosys, but is quietly revolutionizing the global banking infrastructure. We are talking about Intellect Design Arena. Born out of the demerger from Polaris Consulting in 2014, this company has transitioned from a services-led model to a pure-play product-based powerhouse. With the global fintech market expected to reach $500 billion by 2030, Intellect finds itself at a sweet spot. But is it a hidden gem or just another IT stock? We will analyze their disruptive eMach.ai platform, their impressive client roster of Tier 1 banks, and the financials that every investor must know. Let's decode if this stock belongs in your long-term portfolio. What makes Intellect unique? It's their architectural philosophy called eMach.ai, standing for Events, Microservices, API, Cloud, and Headless with AI. This platform is essentially the Linux of banking. Instead of banks buying one giant, inflexible software, they can now pick and choose from over 800 microservices and 1,200 APIs. This composable architecture allows banks to modernize their core without a complete rip-and-replace strategy. This isn't just software, it's an ecosystem. In a world where agility is everything, eMach.ai gives Intellect a massive competitive edge against legacy players who are still stuck on monolithic systems. Intellect Design Arena doesn't put all its eggs in one basket. They operate across 4 primary business units. First, IGTB, Global Transaction Banking, which is their cash cow, used by 9 of the top 10 global banks. Second, IGCB, Global Consumer Banking, catering to retail banks. Third, Intellect AI, which focuses on insurance and wealth management. And fourth, Quantum, focusing on central banks. This diversification is crucial. When retail banking slows down, transaction banking or insurance tech often picks up the slack. They are currently managing over 10 million transactions per hour globally, proving that their products are built for massive scale. Let's talk numbers. Intellect has shown consistent revenue growth with an annual contract value, ACV, that continues to climb. Over the last few years, their revenue has hovered around the 2,500 crore mark, with EBITDA margins showing resilience around 20%. What's most impressive is their R&D investment. While many Indian IT firms spend less than 2% on R&D, Intellect consistently reinvests a significant portion of their revenue back into product development. This product DNA is visible in their high license and SaaS revenue, which offers much better margins than traditional man-hour-based services. They are virtually debt-free, providing a solid safety net for investors. Intellect is truly an Indian multinational. They have a massive footprint in the Americas, Europe, and the Middle East. Their client list is a who's who of the financial world, including names like HSBC, Citigroup, and the Reserve Bank of India. In fact, their GEM, Government e-Marketplace project in India, is one of the largest e-commerce platforms in the world by GMV. Winning Tier 1 banking contracts is extremely difficult because of the rigorous security and scalability requirements. The fact that Intellect keeps winning these deals globally proves that their technology is world-class and can compete with global giants like Temenos or Finastra. In the IT world, you are either a doer or a thinker. Intellect is a thinker. Their intellectual property, or IP, portfolio is their biggest moat. By owning the code and the platforms, they don't just sell hours, they sell value. Their SaaS transition is the next big trigger. SaaS revenue is predictable, recurring, and scales without adding massive headcount. As they move more customers from on-premise to the cloud, their margins are expected to expand further. With over 270 customers across 57 countries, the cross-selling opportunity for their new AI-driven modules is massive. They aren't just following trends, they are setting them, with 8112 Fintech Design Center, the world's first design center dedicated to financial technology. No investment is without risk. For Intellect, the primary challenge is the long sales cycle of banking products. It can take 12 to 18 months to close a single deal. Secondly, they operate in a highly competitive space against global giants with much deeper pockets. Any slowdown in global IT spending, especially in the US and Europe, directly impacts their order book. Furthermore, because they invest so heavily in R&D, any failure of a new product line can hit their bottom line hard. Investors should also monitor their talent retention, as the demand for specialized fintech developers is at an all-time high, leading to wage inflation and margin pressure. So, what's the final word? Intellect Design Arena is a high-conviction play for those who believe in the productization of Indian IT. It is currently trading at a PE ratio that is often lower than high-growth SaaS peers, potentially offering a valuation catch-up. If you are looking for a stable dividend-paying giant, this might not be it. But if you seek a high-growth tech company with world-class IP and a massive addressable market, Intellect is a strong contender. Always consult your financial advisor before investing, but keep this hidden gem on your radar as it builds the future of global banking. Thank you for watching.